trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
It's just as ridiculous. I don't know what's going on. I don't know if anything's working or not. Can anybody hear me over there and in what's going on? Okay. I don't know if you can hear me. Oh, it's very frustrating. Okay, this is where we are, folks. Let me get up here. Our trade that we, lazy. Here's our trade today was we sold the crude oil right here at 68.80. Now it has a $400 profit in it. It did miss our stop by about 30 pips. This is where I'd be taking profits now, folks. And I can see the pullback now is just about exactly at the 61% retracement right there, and so that's where I would be taking the profits, because when I get this $100 profit in it, and with this big bar down like this, one thing I would do is put me at the 65.80. That way it'd be, if you get that type of move, it would even be better. Now, Bill Meridian was supposed to be, he is here. Bill, I think says Bill's here. Let's just check in and see what we have. I'll check to see if Bill's here because he said he's ready to go. Let's just get up here. Hold on, and we'll see what we got here. Wow, man, I am just not a technical person, I guess is what they say in the trade. Hold on a second. I see you're here, but I don't know what else to do, Al. He's there. I see you. Al, can you check and see where he is? Hello, operator. Boy, oh boy. I don't know what that means. Well, wow, this is really just a minute here. Golly gee. I'm trying to connect you to wow. It's into my I don't know what to do. Idea. Yeah, I really don't know what to do with them. I'll just tell him maybe next week. Can you? Well, I'll just hold on. Let's just. Boy, hold on. I can hear. Well, am I being heard by anybody at all? Okay. Okay, Bill, are you there?
I'm right here.
Hello, Bill. Hey, good. We're ready to go, so please share with us what you're looking at, my friend. We appreciate it.
Sure. If I'm unfamiliar with Teams, I don't know how to share my screen.
It's up in the corner, and that'll give you a pretty good idea where you are. Those three dots up there, Bill, in the far corner, you just hit that three dots, and it says, yeah, there you go.
Yeah, so what do I do here?
Yeah. hit those three dots, scroll down to hit share screen, and that should put. Of course, you're asking
your voice is
one
breaking
monkey
up.
to try to wash. I'm sorry about that. There's something wrong with the Wi-Fi connection here, which does. That's what we're watching. Just go ahead and do your talking here if you can. If you can share the screen, I think that'll be good. I got it here, but
I'm sorry about this. I'm trying to do so, and I think I have.
I understand. Okay. Just double check. I don't.
You should be seeing it now. How's that?
Ask Al, is that okay coming through? Can you double check for me, please? Shit.
It says I'm sharing my screen. You should be seeing it.
Bill, yeah, okay, I think I haven't seen it quite yet, but I don't know what else to do, so I'm a little concerned here. Just having all kinds of, I've been hacked by Mozilla, and they've just been making my life miserable today, so
I'm sorry to hear
that's
that.
pretty, and I don't know if that has to, no, there's nothing you can do about it.
Well,
okay, here it says watch. I don't know if we're there.
Anyway.
On the line now, by golly.
Are the listeners seeing the screen?
I believe they are. Let's double check one more time. Yes, we are. We see it there.
Okay. Okay, Cycles Research. This is July 24th, 2025. We had the Foundation for the Study of Cycles live conference, the first one, in, of course, since the 90s. June 12 to 14 in New York City. There you see to the left, that was the photograph of someone presenting. It's a very nice facility on 54th Street in New York on the east side. And there's Larry Williams and I. And I was very pleased to learn that Larry is very much into health as I am. So he shared a lot of health tips as well as market tips. And if you're interested in the cycles I'll be presenting, you go to cyclesresearch.com. I have a new Astro website, BillMeridianAstrology.com, which is different from BillMeridian.com, which is still up there. So the summary, the stock market cycles rise through 2025. I believe notes will rise in August. There's a change in the oil outlook. I think it is moving somewhat higher, not much higher, into year end, and I'll discuss that. Gold, I think, is going higher. And more scandals, which I'll talk about, and the skyscraper effect. I'll take that last one first, because with the Federal Reserve building this new $2.5 billion structure, does that qualify as a skyscraper effect, where people build skyscrapers at major tops? So I'm beginning to wonder. It's particularly interesting because it is the Federal Reserve, which is not in the business of building skyscrapers, but because they control the money supply of the country. That is extremely interesting. Okay.
We got to take a break, Bill. I don't know if you can hear me or not, but
I can hear you.
Be with us in just a second. Okay, buddy. Okay, great.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Only nothing. 5B Black Meridian, please continue, Bill. I'm only hearing about every third word, but evidently it's my system, so please continue.
Sure. Well,
if you can hear me. Okay, great.
I can hear everything, sure. More scandals. Let me just talk about that for a minute since it's in the news. This eclipse that is coming up in September is on one of the equinoxes or the solstices, when the sun is at 0, Aries, Cancer, Libra, or Capricorn. And such eclipses have an effect on the entire world because these are the world points. And not only that, it opposes Saturn and Neptune. It's 180 degrees to Saturn and Neptune. And as I put up on Mastering Geopolitical Prediction, I put up a forecast for Russia, which is not favorable because on Saturn-Neptune conjunctions, we had the Bolshevik Revolution, we had Stalin die, had the Berlin Wall fall down, and so overall unfavorable. But I also mentioned it has a great relation to scandals because Neptune is what you feel is true, what you would like to believe is true. Saturn is what is true. And when you put the two of them together, the illusions crumble. And so there have been a lot of scandals like Teapot Dome, Watergate. And so this is more powerful than any of those. And it affects the whole world. And if you're caught up in that, good luck. And one of the people whose charts fit right into this is Hillary Clinton. And of course, now the Russians have said they had very negative news about her health, which was mentioned starting yesterday on the tube. And to some degree, Barack Obama and other people, but this is not an effect that is going to go away. It's going to persist, I think, right through Q1 or even Q2 of next year. So if you like scandals or you like, images collapsing, hang in there because you're going to get lots and lots of them. And as I mentioned, the skyscraper effect is the fact that, the biggest buildings have tended to be built around market tops. And of course, the tallest buildings. The new Federal Reserve building is not the tallest building. It just is ironic that they are in charge of the nation's money supply, and they're spending so much money that has brought a lot of attention. And as you might guess, the horoscope, the enactment of the Federal Reserve is hit by this eclipse and the Saturn and Neptune, and they're calling it a scandal. So those are things I've picked up that are non-market. So let's move on to the economy. And this is an extension of my work in planetary economic forecasting. That is a composite of the 6 cycles that have the greatest effect on the economy, of which number 1 is Jupiter moving through the signs. And it had been declining since last year. And as you can see, it hit a low here right at the beginning of the second half of the year. And so this is projecting an economic rebound. This is based upon the Business Activity Index. It goes back to 1780 that was developed by Ameritrust Bank. And in 1988, they stopped updating it. And I've maintained it up to this day, and I run my cycles from that. So that's very key. And I don't think the market has recognized this, that the new administration, a lot of the proposals in the big, beautiful bill are designed to stimulate growth. And I think the market finally recognized that on April 7th. And it got over this nonsense about tariffs. And by the way, the only other president, I think it was Grover Cleveland, was elected, defeated, and elected again. And in his second term, the big news item with him was tariffs. So that's a strange echo from the past. But here we have the blue line, of course, representing the high from earlier this year in February. We've broken through that, and we've broken out of this ascending triangle, as any technician would tell you, and that projected 6350, which has been hit. This is charts a couple days out of date. But this big rectangle right here, which is on its side, this points to 7900. Now, just about a few weeks ago, I spoke to Felix Zuloff, Europe's most successful fund manager in the 90s, and he said he's looking for 10,000 before the market gets in any trouble, and it's probably out at around 2027. So right now, however, we are entering the weakest rolling quarter of any year. That is late July to late October. So the seasonality is turned against the market, and I don't think we're going to see any serious pullback, because if I am correct about this blue line here, that's at 6150, is support, and I don't think that's going to be broken. So just to backtrack a bit, we had a very overbought status, and we had great overvaluation, and we had Juan Soto's baseball contract and other great excesses in the auction market. That needed to be corrected, but it is a year ending in a 5, and there's been very few years ending in 5. I think one of them was down 0.5%, but most of them are up, especially if they are in the second year of an election. The year after an election is usually weak, and there have been 6 years in which these two coincided, the year ending in 5 plus a post-election year, and the year ending in 5 won every time. So forget about the year after the election; it has no effect. So what would the resolution be but a steep correction in Q1? I thought it would be 10% and end on March 28th. It was 20% and ended on April 7th. So there you see the April 7th low down here, and it came rallying back. And so now I think it's pretty clear we're going higher into the end of the year. If there's going to be any weakness, it's going to be over the next couple of months. I'll show you why. Well, first of all, this is when I was last on your show in April, I said if wave C is 1.0 of wave A, that's wave A and wave C, then we're going to hit 51.65 on the downside. 51.20 is also 38.2% of the entire October to February rally. And the actual closing low was 50.62. So 50.62 is close enough to 51.20 and 51.65. It's this, as Joe DiNapoli would say, confluence of retracement levels. So that's where that completed the correction. That's over. And to just go back at a story I've told before, but I told it at the foundation conference, I'll say it again. Back when the stock market crashed in 1987, I called Art Merrill, who wrote Behavior of Prices on Wall Street, and I said, hey, Art, isn't it, what's more important in determining a bear market, price or time? And he said, well, if I had to pick one, it would be price. So I said, we could have had a mini bear market in late 1987. He said, I think that's right. And of course, that was correct. So because of this excessive creation of credit, bear markets we can get overvalued, but then we correct more quickly. In other words, the market comes back. And as Ian Notley used to call these successful reflations, in other words, just a continuation of the inflationary spiral. And I think to some degree, well, Bitcoin and its tokenization, I think, is just adding to the inflationary pressures. So anyway, but look at what happened at the low. And I think I showed these the last time I was on, but look at that. Sentiment was important. That's the newsletter's Investors Intelligence Bull Bear Spread. You see that. And look at this. CTA positioning in U.S. equities was at a low. So the professionals, you had the newsletters bearish, the professionals bearish, and now we got to sell something to somebody.
Yes, we do. Stay to us, folks. Bill Meridian. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, with Bill Meridian. Please continue, Bill.
Hi, Larry. Yeah, and so we just looked at professionals. CTA positioning was at a very low level at the bottom in April. And here's the bearish public. So you had bearish, bearish, bearish. which is what you should get at a low. So that was another clue that was just a Q1 correction. It was not going to negate the bullish effect of a year ending in 5. And I think the next graph was most interesting. One thing that gave a lot of us hesitation was that the retail investors, S&P 500 retail net buying and NDX retail net buying, went up from the low. It was rising. In other words, as the market came down, they were buying more. So why would, in fact, this struck Felix when I spoke to him in Europe, struck him as odd. He said the supposedly dumb money was right and the supposedly smart money was wrong. Why is that? And I think it's because retail had it right, because they understand no tax on overtime, no tax on tips, and no tax on Social Security. People who run big Wall Street firms, I don't think saw the value in that or realized how valuable it is to put more purchasing power back in people's hands. And I think so this time the little guys had it right. They were buying even before the low was in. And I think this was the reason. And as I said now, the economic cycle, which was one of the first slides I showed, is bottoming and turning up. And I think the reason is all of these pro-growth policies initiated by the new administration, to which Wall Street was paying no attention, but the little guys were. So I think, it's this regulatory framework for cryptocurrencies is a positive. This Genius Act is a positive. The developments in quantum computing, AI, these are all positives. They create jobs for people if you happen to be in the right place at the right time and have the training for that. So here's the dynamic S&P cycle in 2025. This is from my software. And this is my main man here. I find this to be the most accurate. It is a dynamic cycle because it is based upon the most recent price data. And other cycles like the election year cycle, a 4-year cycle, a 1-year cycle are static cycles. They stay relatively the same. They may change over the years. So let's take a look at those also. So here you go. Here's a post-election year and a year ending in 5 cycle composite. And the red line, the red is the percentage of months that the market was higher. So you read that over here. That's 80-something percent here, 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 and here. And the blue is the percentage price gain. You see that. And the green, which is what I look at, is red multiplied by blue. It is, if you're up 2% and you do that 80% of the time, you multiply one by the other and you get 1.6%. So as you can see, the low here was in March, which is why I thought the low would be in March. And remember, this is a combination of post-election year and year ending in 5, of which there have only been 6. Small sample size, and as you can see here, the only other weak month here was June, and then look at July until the end of the year. Q4 is usually bullish. It's especially bullish in a year ending at a 5. So if you put the dynamic cycle together with the static cycle, they both point up. And I think the bottom in the economic cycle and the new administration are the fundamental drivers. Now, here's the sum of the 1, 4, and 10-year cycles, another way to look at the same thing, in which we have the 1-year cycle in red. It's the usual. I've shown this before. Blue is the 4-year cycle, and green is the years ending in 10, the decennial cycle, and this is the sum of all of them. And as you can see, the only weak period here is September, October, which is traditional. So let's look at a blow up now. This is 1, 4, 10-year cycle in Q3, and you see the top here is right about early September. And this is one cycle that most people will not pick up. If the annual cycle is the relationship of the Earth and the Sun, that's how you generate a calendar. My thought way back in the 70s, which I discussed with Arthur Merrill and led to the creation of the Astroanalyst program, was what about the other planets through the signs? And this is Mars, and Mars is about to hit this high point in its 1.8-year cycle on August 8th. So this, in the past, when this has happened, it doesn't mean the market's going to crash. It means there's a 10% greater likelihood of the market being lower 90 days later than there would be if this cycle were not operative at that time. And as you can see, the low over here is usually over here. That was one year ago, October. And so that's a warning sign coming up. So number one, we have the one for 10-year cycles pointing down, and we have this pointing down. And this modifiers, well, I just think we might, the fourth item down, we had back-to-back 20% years. In the past, when you've had these, the gains were limited in the next year to about 10 to 12%. So yes, it might be up at the end of the year, but not, I think, by 20 or 25%. And bullish sentiment was at a high in 2024 for the second year in a row. And again, in subsequent years, in the third year following such developments, the market gains have not been negative, they've been reduced. So that's why I call these the modifiers. And so the big change has been, I theorized technology would remain a leader, but the Magnificent Seven were very overbought. So if I was right and corrections shake up leadership, then the leadership in technology that will emerge off the April 7th low is not going to be the same as it was before that. And that's what I think has happened. Tech stock leadership has changed. And here we are. This is the sector scan. The RSV is a measure of relative strength. And you can see technology is number one, energy and healthcare are last. And I had predicted that technology would be number one, industrials and financials, which haven't quite been as strong as I thought they would be stronger. And these two are duplicative here. They are the communication sector. So that's where it stands right now. And here's NASDAQ seasonality. And you can see also this week period, July through September. So another reason, if we're going to get any correction or consolidation, it's going to be starting sometime, I think, in the first week of August. But I don't think it's going to be that bad. And now here's, just for fun, I threw this in. You know, I love contrary opinion, Larry. And here is autos on the brink. And autos are on the brink of what? Well, on the brink is a bearish signal. And this was about 2 weeks ago. So I've got my eye for any firming and relative strength in the automobile stocks, what few of them are left. And so this, I'll just briefly, I've been over this before. Cycles plus seasonality plus relative strength equals profits. So the seasonality, again, is a static cycle. The cycles I'll show you are dynamic, and the relative strength is all important and very much ignored on Wall Street. And here is a surprising graph. I just threw this in at the last minute. I don't know, Larry, I didn't even know this. The average holding period for stock on the New York Stock Exchange, we'll do this when we come back.
Yes, please do it. That'll be an important fact. We'll be right back, folks, with Bill Meridian.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hey, we're back with Bill Meridian. Bill, we have a question from a listener in Paris, France, and his question is, the fact that the new moon today is in Leo, does it have any effect on short-term movements in the market?
Not that I can remember.
Okay, that's the answer. Please continue, my friend.
Here's this surprising graph, the average holding period for a stock on the New York Exchange in years. I'd never seen this before, but it used to be as high as 10 years back in 1940. Then it was 7 years and 55 into the 60s, and now it's less than 1 year.
Oh, my God.
Isn't that unbelievable?
That is hard to believe. I find that super hard. Wow.
Anyway, let's go back to stocks. This is my relative strength screen, which I just ran this morning. Strongest stocks in the S&P 100. And I'm looking at the 100 because this is the biggest cap stocks, and that's where the action is. And Oracle and NVIDIA, both of which I own, are 1 and 2. And Boeing, which I also own, I think I recommended it on your show, is number 5. And you see some of the banks. And then you see Microsoft. Do you see... well, there you see Amazon, which apparently is coming back based on their earnings a bit. But you don't see the Magnificent Seven. You see Alphabet down at the bottom, and you see Microsoft is about number 10, but I expected Microsoft. So there's Amazon. You don't see the other ones. You don't see Meta in here, the old Facebook. So there has been a change. You noticed Oracle is up at the top, and NVIDIA, it cycled top last autumn. It is now bottoming out. It's turning up, so I own it again. And Boeing, I think, will be the best performer in the Dow Jones Industrial Average by the end of the year, after having a very, very hard time of it. And now let's look at the weakest stocks. United Health, and then there's Halliburton and Schlumberger, 2 standard big cap energy stocks. And a reason I've stayed away from biotech is the stocks are not showing any strength here. UPS has been in trouble for a while. Now, here's an old line technology stock, Hewlett-Packard. See, it's fallen. It is not rallying. It is lowly rated. And if you go down this list, you'll see a lot of pharmaceutical stocks and a lot of energy stocks. So this is a source of short sales. And now the next screen is screen 2. This is a bit different. It combines the rank you just saw, the relative strength, with the seasonality. So number 1 is Advanced Micro Devices, which is not, again, it is not a Magnificent Seven stock. Synopsys, which is also technology, you see Intuit in number 5. And Microsoft and Oracle is still in there, but you see a lot of new names. You see Lam Research, LRCX, and Western Digital, WDC. They did not participate before, like Cadence, CDNS, but they are performing now. So the purpose of of any correction is to shake up leadership, and it certainly did that here, bringing these lagging technology stocks up to the top. And here's the bottom stocks. Again, you see Halliburton, Exxon, what else? Again, United Health again, and X-Ray is Patterson Dental, and Hologic, and Lilly, Schlumberger again. So it's the same story from both screens. So one of the stocks that I can never forget, Storage Tech. It was a premier stock in the 90s. They just do hard drives. And I said, well, this will be a commodity stock. And it was. But look at the relative strength down here. This goes back to 2015. There's been no relative new low since about 2016. And now you've broken out of a very big formation. And when you see this and higher lows in momentum, that means, yes, the stock's overbought, but in view of the momentum and in view of the relative strength, not really. That looks pretty scary, pretty overbought, and it is. But this tells me if it corrects, it's not going to correct much. And I think the stock is up, is it 70 or 80% from the April 7th low? Now, Storage Tech is not a Magnificent 7 stock, and it's not one that outperforms. So this is my primary example. This is a stock that I hold. It's correcting a bit now, but I'm going to hold it till the end of the year. And there's the monthly cycle. The monthly cycle doesn't top until late December, and these cycles can be off a little bit, one way or the other. As you can see here, the stock bottomed early on that bottom, but not on that bottom. And here's NVIDIA, which we spoke about. And NVIDIA, relative strength, if it keeps hitting new highs, what can you say about it? You can just say that it's strong. It's broken out to new highs relatively and in absolute price. And here is the cycle. And this cycle weakened way back last October. But as you can see, it is rallying, but it is coming into a top here in August. So it may be a time for traders to take profits. And this is typical of technology, topping in the middle of August and bottoming around October, in the middle of October. So, but this could be a correction of only 10%. I'm not saying the stock is going to, the cycle indicates magnitude, indicates direction, not magnitude. And this is Boeing, which I mentioned before. Now look at this. Look at the upturn and relative strength here weekly, and look at this formation that it's in. And look at the higher lows in momentum. Now this is where technical analysis began and ended with me in the 80s into the 90s. But now, there you go. There's the cycle, which back here at the, let's see, the low was in Q4. So if you look at Q4 here, we don't show Q4 on the graph. Sorry about that. But as long as the cycle is pointing up, and it's pointing up into October, I'm holding on to it. I think that will be the leading Dow stock, as I said. And one out of left field that my screens picked up that I bought, fortunately, before their earnings, Cleveland-Cliffs, CLF, the steel stock. And I bought it right here because it gave a short-term buy signal. But as you can see, higher lows in momentum, the upturn in relative strength. And here's the, that's the 10-year note. Sorry, I don't have the Cleveland-Cliffs cycle in here. But this, if you look at the weekly and the monthly, it looks like a longer-term turnaround for Cleveland-Cliffs, so, and it's a very low price. So this is what I mean when I say the shift in leadership. It certainly wasn't a leader before. So now let's take a look at the 10-year notes. Now, this is a bit of a problem. The July and August are the two strongest months to hold the 10-year note with a 30-year bond. But here the dynamic cycle is pointing down, and the dynamic cycle usually has its say either in pushing price down during a bullish period or by just restraining the magnitude of the gain. So I thought it would restrain the magnitude of the gain, and I have a position in it long with about a 3 or 4% loss, but I'm holding it into the end of the month because down here the dynamic cycle bottoms. And in the last half of August, both the dynamic cycle and the static cycle, the seasonal cycle, will both point up. So longer term, I think rates are rising, but I don't think between here and the end of the year. And that is, here's the annual cycle right here. It shows July, same type of graph. The red is the percentage probability that it will be up, which you read over here, 65, 70%. Then there's the price gain in blue and the product of both in green. And so you see after that it gets quite mixed. But, here you're really okay here June through November.
to let us know how to reach you. We'll stay with us with Bill Meridian in a few more seconds, folks. We'll be right back in 2 minutes. Well.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back. And how do the folks reach you, Bill, if they'd like to see a copy of your newsletter or get in touch with you?
Cycles Research at cyclesresearch.com, ranked number 1 for market timing 2002-2016 by Timer Digest. I was ranked number 3 over a period of 19 years versus 170 services. I was an advisor to Frankie Joe, a fund manager at Adia. You can have your own portfolios run according to the cycles, and they would look like that, which is Intel, cyclesresearch at gmail.com. Send me I can run these daily, weekly, monthly on anybody's portfolio, any S&P 100, S&P 500. And you can get me at cyclesresearch.com, BillMeridian.com, BillMeridianAstrology.com, or YouTube, Mastering Geopolitical Prediction.
Okay, one other question we have from one of our listeners. If a person was interested in starting to learn about astrology, what would be the first book they would start with, Bill?
I think Horoscope Symbols by Robert Hand.
Oh, is Robert still alive?
Sure is.
He's in mid-80s now, isn't he? And almost 90?
He must be.
Yeah, because I know Alfie just turned 91, so I imagine they're all being. As I met Rob Hand many years ago, and you were at the New Orleans seminar, and you said you're talking to the smartest guy I know, and he is pretty smart.
Oh yeah.
Yeah. Hey, thanks for joining us, Bill. We really do appreciate it. We'll have you on next month. And if something comes up that you'd like to see or tell us, please let me know, and I'll get you on right away.
Okay.
Okay. Bill Meridian, folks, Cycles Research, and I'll tell you, he does some of the greatest work you can possibly imagine. Also, we've got we're going to have live trading tomorrow between 9 and 12. Should be an exciting day given the volatility we're seeing. And the second thing is that on tomorrow we're going to have Jeff Huge of Alpha Insights. He will be our guest at the end of the day tomorrow. So I want to everyone to live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow.